Hey everyone, Jenna Hernandez here with the Seal Group at eXp Realty, your REI experts. Today, we're going to be talking about how to determine your strategy and your risk tolerance. The first step in determining how you will go about investing and building your net worth is, of course, to know why you're investing in real estate in the first place. Number one, are you looking at this solely as a tax write-off? Is this a tax shelter for you? That's a very different strategy than perhaps investing for short-term goals. Okay, let's also take a look at appreciation. Is that what your main goal is? Do you want to buy and hold and see that appreciation come about over time? Or do you want to do a more short-term approach where you can purchase a distressed property or something maybe a little less turnkey, but have a faster appreciation rate? Cash flow, that's another one. Are you looking for positive or maybe even just neutral cash flow because you have another priority on your mind, maybe appreciation or tax shelter? Or do you want to replace your full-time job income with the cash flow from your real estate investments? It's a very different approach, very different risk tolerance, and very different time input. Do you want to purchase turnkey assets in developed areas, or are you willing to look into areas that still need to be developed? In that case, you will probably see steeper appreciation more quickly as the area continues to swing upwards. The next piece of the puzzle is, what is your risk tolerance? Are you willing to risk big and win big? A high risk tolerance means that you're probably more into flipping houses, maybe wholesaling houses, purchasing houses in areas that are developing, or doing off-market deals and crazy renovations. A medium risk tolerance will probably land you in that traditional buy and hold model. Maybe turnkey, or maybe a few repairs are needed to get it up and running. Another thing that you'll probably like is corporate rentals, vacation rentals, a short-term rental that has high cash flow. And then, of course, your turnkey, multifamily, and commercial opportunities. A low-risk type investor usually is looking for one of those longer-term goals. This can be a traditional buy and hold model, but they tend to go toward turnkey or syndications, REITs, hedge funds, lending their money, whether privately or to hard money lenders, seller financing, in tandem with commercial properties in retail or office spaces, or large multifamily. Time commitment, that's a big one too. In general, if you don't want a lot of time commitment put in, you're probably going to lean more toward those medium to low risk opportunities. If you don't mind putting in some grind and some time and some heavy supervision, as well as involvement with any partners in the deals, agents or wholesalers in various markets, you might be more apt to jump into that high risk pool. To close this out, I want to let you know that these are very blanket and general statements. I myself have had a very safe investment and very, very lucrative investments at every single typical level of risk tolerance. So please do take that in mind and take this away with you today. The most important thing you can do is vet the people that you are working with. The second thing is vet the property that you are looking into purchasing. And lastly, make sure that you work with people who are willing to walk away from closing a deal to protect your best interests. Thanks for joining me as always. This is Jenna Hernandez with the Seal Group at eXp Realty, your REI experts. We cannot wait to join you next time. Happy investing.